Jonathan Isaac, the world is finally familiar with ETFs, or exchange-traded funds. Now Eaton Vance is rolling out NextShares, which are ETMFs, or exchange-traded managed funds. Why don't you explain what they are?
Sure. So NextShares are a new type of actively managed exchange-traded product, which use what we think are the best benefits of traditional open-end mutual funds, with obviously some of the operational benefits that ETFs have introduced to the market. Combine these together to give what we believe is a better performing, or potentially better performing, product than traditional open-end mutual funds.
So explain how you disclose the stocks that are in the funds, because it sounds like an actively traded ETF or an actively managed ETFs, but there's some differences.
There are differences, two significant ones. One you mentioned, which is the disclosure of holdings. The key difference, I would say, between an active ETF and a NextShare is the fact that we as NextShares will disclose holdings more in the traditional line of an open-end mutual fund. So I believe the rule is quarterly with a month's lag. We at Eaton Vance tend to do it monthly with a month's lag. So they won't be disclosed throughout the day as you see in an ETF. We believe that's important and will be attractive to fund sponsors in terms of protecting their intellectual property.
So who should be using your ETMFs, the NextShares? Is it for people who like ETFs and they like open-end mutual funds and they want to get something right down the middle? Who's your target audience?
I think the way that certainly I think about this is an evolution of the open-end mutual fund. It's for long-term investors. We're not looking for people who are looking to trade in and out of funds on a daily basis. This is for people who look at it as their savings, their retirements, and so forth, and that's the people we hope to appeal to.
And it gets priced at the end of the day like an open-end mutual fund?
Exactly right. There are quotes throughout the day, but the actual price that the person will end up owning, it will be exactly or very similar to a traditional open-end fund once a day struck NAV.
All right, and then finally, what are the costs for NextShares, and when are people going to be able to go out and buy them?
In terms of the costs, we expect, and we've done fairly significant back testing on this, we've shown that overall expenses, and when I say that I'm talking about explicit sort of operating expenses and then maybe non-explicit things like flow-related cash drag and flow-related trading costs, that those could be on average around 63 basis points cheaper than your traditional open-end mutual fund, so a fairly significant saving over time. And in terms of availability, right now we're in the process of discussions with the broker-dealer community, obviously who've got a significant amount of operational work to do, as well as fund sponsors, where we've had obviously some success to date, but we're trying to get as big a consortium of leading asset managers who have a variety of products available. One important point is NextShares would be available in any kind of asset class as open-end mutual funds are also. So we're targeting towards the end of this year and hoping that that's when they'll become available.
All right, thanks a lot.
Thank you.